The biggest determinant on whether you're going to make money in the game is whether you're a trader or an investor. A trader is a loser. An investor, well, they're a winner. This would be an example of a trader. This would be an example of an investor. Trading is exciting. Investing is boring. Trading is cool. Investing is square. Both trading and investing have a similar definition. Both allocate money in the expectation of future gains. But a trader is seeking to sell their particular security or asset for more money than they paid for it. Whereas the investor is looking to generate income from the security or the asset and hopefully be able to sell it upon death or bequeath at a higher price. In terms of winners, 95% of all traders are losers. In terms of investors, 95% of all investors are winners. In terms of time frame, this is really the key distinction. Traders play a short-term game, often flipping or trading, day trading in and out of a security or an asset in days or within a day. Whereas the investor is in it for the long run, a very long time frame, years, decades, maybe a lifetime, as long as that asset or security is still generating income, which is why they purchased it in the first place. They're never going to sell it, they're going to hold. So the trader would have a constantly buying and selling strategy, whereas the investor would have a buy and hold strategy. Now, in terms of trading and investing, the trader, 95% of people trade. It's a losing game. Only about 5% of people invest. It's a winning game. And trading is a high-risk game, but it's also a low-reward game. And investing is a low-risk game with a higher reward. So why would anybody trade if everybody's trading and everybody's losing and no one's investing, but the ones that are getting very wealthy? Why is that? Well, again, trading is exciting, investing is boring. So emotionally, people like the exciting game. Culturally, trading's cool and investing's boring. So that doesn't do much for people. Even in Hollywood movies, they portray the trader as the cool person you want to be. They never really portray the square, boring investor because no one would go and see that movie. You know, psychologically, it's like the trader is the hare, the investor is the turtle. Constantly just plodding along, whereas the trader is sprinting, trying to win, trying to time the market, trying to buy low, sell high. Unfortunately for the trader, usually when they're most excited is when prices are at their highest, and that's when they buy in, and that's why prices rise, because they're buying in. And then when the price peaks and panic or fear starts and the price starts to really fall, they sell out of fear. So 95% of them lose because it's the opposite taking place. They're actually buying high and selling low, whereas the investor is simply holding. They just ride out the ups and downs. They don't get involved. You know, In 1981, the Dow Jones Industrial Average was at 2,000. Today it's about 33,000. It's had its ups and downs. In 2008, it fell 40%. But the investor rides that out, whereas the trader generally gets buried in that kind of a market. So a lot of it, the trader seems to be externally driven, whereas the investor seems to be more internally driven. The investor seems much more disciplined than the trader. You know, there was a famous experiment, probably everybody's seen it, in 1972, the Stanford marshmallow experiment, where they have a little kid. They kind of have them come in a room and they put a marshmallow in front of them and they say, you know, if you don't eat that, we'll give you another one in 15 minutes. Well, I'm betting the traders are the kids that ate the marshmallow right away, whereas the investors were the one that wanted to eat the marshmallow, but they didn't. They delayed that. They took a disciplined approach. So they have staying power and they take advantage of compounding in the long run. And we don't hear much about investors because they're not in the news, they're not in movies, they're not guests on TV, because they have nothing to say other than, how are you successful in the market? Well, I made a little bit of money, basically every year, and I just bought and held and never sold. That wouldn't make a great movie, and it wouldn't make great TV, whereas the trader is going to give you a million different strategies, and chances are you're going to hear from a trader who's actually managing people's money, and they're taking a fee annually, whether the people win, lose, or draw within their fund. And they're probably also taking a percentage of the profits if there are any. And generally, again, there are some traders that are successful, but it is a small amount. They're probably the ones you hear from. You just don't hear about the millions and millions of people that were unsuccessful, whereas the investors you just never hear from because they're playing that different game. So it's really critical that you understand the distinction. Are you a trader or are you an investor? Which game are you playing? It'll be absolutely key to your wealth. Jim Ossifee, interpreting events to build wealth.